OCFC meeting. Melanie, you could probably just let RJ and JGS in right now if you wanted to. Excuse me. Okay, sorry, I just had to move over my agendas. So we would call to order the OCFC meeting. And the first item on the agenda will be roll call. So we'll go through once again. Dan Bloomer.
Here.
Paul Ruskevich.
Here.
John Douthit is absent. Mike Torelli.
Present.
Vincent Odock.
Present.
Tyler Etzel.
Here.
Leslie Pieri.
Present.
Also with us, Laurie Villasuso, CEO, Galileo Technology Group, Vinny, Managing Director, Melanie Schouten, Chief Operating Officer, Ed Janishevitz, Chief Financial Officer, Kevin Dowd, Attorney, and Russ Genzel from Harris Speech. The first item on the agenda is the approval of the minutes from February 11th, 2021, but similarly to our IDA meeting, we won't be asking for approval from this board. We will just post them as is. Next up, Ed, with first financial reports and requests for payments, but we would turn it over to RJ and Rob first to go through the OCFC audit.
Hey, well, thank you for having us back for the OCFC audit review. Similar to the IDA, we had an unmodified opinion with regard to the Orange County Funding Corporation's standalone accounting records and financial statements. There's also a very small but similar management discussion and analysis, which gives us a brief overview of the changes in revenues and expenses for the year. But the most important thing, if you turn to page 5, we'll start with the statement of net assets. So for the funding corporation on a standalone basis, our cash and cash equivalents are approximately $962,000, very similar to the $921,000 that we had last year at the same time. Certificates of deposit are a little bit less this year at $541,000 versus $1,025,000. As you will see, we used a portion, the majority of that difference to fund the loan resiliency program. Speaking of which, we have the loan receivable. This is net of the $70,000 allowance. So the overall receivable balance is roughly $346,000. And then you take into account the allowance, which is $70,000, leaves us with a net receivable of $276,513. A very small amount of accrued interest receivable at the end of the year. And due to the timing of the payment, we have only about $1,000 in prepaid expenses versus the $15,500 we had last year. That was the timing of the insurance payment going out in December of last year versus January 21 in the current year. So we don't have that prepaid expense in there. For current liabilities, roughly $8,400 as compared to $7,040. In that balance, we have the JGS audit fee that we accrued in, December legal and accounting fees that are due to Kevin and UHY, the professional service providers to OCFC. Lastly, we have our net asset section, designated assets of $150,000 versus $285,000. There is a footnote that breaks down the $150,000 and $285,000 later on in the financials. And the unrestricted net assets undesignated of $1.622 versus $1.673 for last year. So a very small decrease in net assets between the year, but having the understanding that the majority of those net assets were used for the loan resiliency program is the positive impact on the community that the funding corporation has. So any questions on the statement of net assets? No, we'll move to the statement of activities. Not much in the way of revenues, total revenues of just over $16,000 in the current year versus roughly $47,000 last year. Majority of which is a decrease in our interest income, by removing roughly half of our certificates of deposits for the loan resiliency program, would factor into the reduced interest income we were able to generate in the current year. As we all know, checking accounts are not really paying out any interest factor of significance to carry us. And then there were less in the way of other income this year versus last year. So there was less than 12,000 in other income. With expenses, you can see we had a reduction in the project expense from about 120,000 to 85,000. In the project expense, we had 75,000 paid to TSEC for all their services they provided with regard to general operations, as well as grant maintenance and administrative services for the various smart labs and pods. This was approved by way of resolution on January 9th of 2020, full board approval on that expenditure. The remaining amounts were for the Highland Falls restoration project. Professional fees of 23,000 roughly versus 13,000 last year. We had about 15,000 in legal services, about $1,000 in, I said 15,000, correct? 15,000 in legal services, approximately 1,000 for the monthly accounting services provided by UHY, and our audit fee that I had mentioned was accrued in at the end of the year. As we discussed the loan resiliency program, we had administrative costs of roughly 8,700 paid to UHY. They had been the point organization who established and rolled out and continue to kind of monitor the repayments and things of that sort. So they had been assisting from an administrative function, overseeing that program. The bad debt expense of 70,000, that is the allowance we put against the loan, the resiliency loan receivable. Insurance costs are just up a little bit. That's really D&O and other small insurances that protect those involved with the organization. Very minimal office expense. So you can see the change of net assets totaled 186,248, leaving us with a ending net assets of 1.77 versus 1.96. Any questions on the statement of activities?
RJ, this is Mike Torelli. Can you explain the bad debt expense and how you came up with 70,000 again?
Yeah, no problem, Mike. So the 70,000 is about 15% of the remaining 346, I believe, is what how it came about.
What I did was I looked at the first payments were in December. And so when this was pulled together, it was in January. We had about 5 that didn't, borrowers that we had no response from at the time. So I quickly said there's good probability we will not hear from, as candidates for not getting repaid. And some other ones seemed to be essentially late. So I put in another 20,000, we get partial payment from those. That's how I came up with the 15%. That's equivalent of 10,000, loans. And we seem to be about that. We currently have we've extended, I'll go for the chart there where the current performance is of how payments are. But I think we have like 4 that have not yet paid, and another 4 that asked for extensions, which we granted.
Great, thank you. I'd just like to see in future aspect, maybe in a future meeting, if we can see who are the entities that aren't paying back. I'd like to know that. Second question I'd like to ask both RJ and staff is, can you explain who UHY is? I do not know them.
So Andy, if you want to go.
Fine. The UHY Advisors is a national auditor, accounting firm. Previously we deal with like Patterson, Koski, and I can't remember how, and somebody else in Kingston. They were now merged with or purchased by UHY
Yeah.
back in January. And that is our accounting firm. So they do have we would deal directly with the office in Kingston. And I think they may deal with in Albany as far as reviews of our financials before they go out.
Thank you.
Any other questions on the statement of activities? Okay, we'll move to the statement of cash flows, which is the next page. So we'll take our reduction in net assets of 186, add back the non-cash item, which is that 70,000 bad debt allowance. Also the changes in our prepaid expense, accrued interest receivable, and accounts payable, all to the positive from a cash flow perspective. Those all accumulate to a net use of operating cash of about 98,000. We have our redemption of CDs of $1,025,500, a repurchase of 540,000. And then our cash flows from financing is the loan disbursements for the resiliency loan program, as well as the recapture or repayments to date. So we did in fact increase our cash equivalents, cash and cash equivalents from 19 to 20 by approximately $40,000. Any questions there? Okay, so after that, we have the footnotes, very similar to the consolidated set of financial statements, just less in the way of interesting things such as the note receivable from Brionics, development costs, and investments in LLCs. We have a breakdown of cash and cash equivalents by the financial institution that they are held at, detail about the loans receivable, the fact that project expenditures that have been budgeted for 21 is the main source of our designated net assets. And then just an overview of the conduit debt obligations that the funding corporation has been connected with over the years, which is detailed in the supplementary, supplementary information and schedules that follow. If there are no questions on the notes, I will just briefly review our governance letter and internal control. Similar with the IDA, we had no issues with management. We've had and maintained a wonderful working relationship. We've received very diligent backup and source information to review. There were no accounting issues or deemed deficiencies in internal control. With that, any general questions for myself?
I have a question. Could you describe, for us, what form the testing for internal controls takes?
So a lot of our review centers around the vouching of expenses.
Mm-hmm.
It's, if you look at the records, it's something that we can adequately test by reviewing the payment vouchers, the vendor invoices, and the payment process to determine that the adequate level of reviews are taking place, as well as we do review all monthly meeting minutes for both the IDA and the funding corporation, which does document the review and approval of all payments as well as deposits that do come in.
Okay. Thank
RJ, do you review the procurement of said contracts, or is that not part of internal control?
So we do review any large agreements along with the leases for in the sense of IDA, the accelerator locations. We do review the minutes to ensure that the acceptance of those agreements are well documented and approved by the board.
Thank you.
Okay. Lori, I'll turn it back to you.
Okay. So again, with this meeting, similar to the last one, we won't be acting on this today, and in deference to giving everybody more time to review everything. With that, I'll turn it over to Ed to go over the financial reports or requests for payment.
Okay, first chart, as like the other one, is our, the cash balance. I have $1.5 million at the end of February. Just like to make a comment regarding the certificate deposit versus the money market. The funding corporation is expecting to provide funding to the Heritage Rail Trail sometime in the we count now sometime in the summer to the end of the year of $1 million. And so I'm preparing our cash position to make those payments. I assume they're going to come in as we count not as $1 million, but as in a couple increments of a few $100,000 each. Next chart, I see that I put the wrong P&L.
I'm not seeing any charts. We have charts we're looking at?
Are you not on the?
In your OCFC
Okay.
packet.
Oh, okay. Got it.
I can
Sorry.
also put it on the screen if you
Yeah.
need me to.
Okay, I probably get into that. Sorry, I'm.
No, that's fine.
Okay, I mistakenly put the accelerator income and expense summary in there. Sorry about that. I can resend the correct one, but basically it's a much smaller number. Basically the income for February was $12,825, which was mostly loan repayments. And we had fairly small, we call legal and accounting fees for the month for only $600. Year to date, it's a little bit higher only because, again, we pay the insurance of D&O insurance for the year of $15,476. I'll get that chart to Melanie and repackage it for you. And
Ed, when was the last audit meeting you had?
audit meeting? Oh boy.
Audit committee?
Yeah.
Let me see. I think a few months ago.
Okay.
It could have been sooner than that, but I
So
could-
you need to have one pretty quick. Okay, thank you.
All right, next chart is the statement of net assets. Again, not much change since the beginning of the year. You see the small business loans. We see, we had 347. We got the, if I do the math right, 20,000-ish return. We count now return in interest in principal. The final chart next to the final chart is the previous board asked for what the small business loan summary was, where things were. This is through March 9th. I just mentioned that the Postal Service is, we count now, been very slow about getting our checks to us on occasion. So I continue this as long as possible to capture up-to-date payments. But in summary, we had 49 loans for an amount of $476,000. 10 have already been paid in full. That's been back from, I think, November was the last one that was paid in full. And then 34 other borrowers have contributed something to the repayment. So we got almost $160,000 back so far in principal. And far as the remaining balance, 25 of the accounts are current, $193,000. We've closed modified agreements with 4 borrowers to have a 6-month deferral. We won't start collecting from them again until June 15th. There's $34,000. And then we have 10 behind. Either from, I said, there's a few people that we have not received any payments from. There's some that we are, they are interested in a 6-month deferral, but haven't closed the documentation. And there's some that are either one, most likely just one payment behind. I can break that out further if you, in another, for next month, if you wish. And
I wish.
Okay, very good. And we interest paid to date for the program is almost $800. Again, it was the loan, if the first 6 months was interest-free, and then it was 2% for the next 24 months. And then the final chart is the receipts for the previous month. We received 27 checks from the loan recipients for $13,859. And I have 3 vouchers requesting approval to pay. Kevin for his legal services last month, UHY Advisors, again, that's our accounting retainer for the month of February. And then Harris Beach, they did some, we got the invoice for bylaw amendments they had back in the late 2020. So the payments I'm requesting is $3,796.80. That completes my presentation. Any questions?
Before we move on to accepting and approving the payments, for the COVID loan program, also, we want to make sure that we have enough time to go over that with everybody. And we have a separate committee as well for the COVID loan resiliency program. It was determined by the old board that they wanted to maintain the privacy of the individual, or the businesses rather, who received the loans. So we will, again, this is at your direction, but we would absolutely be happy to go over in detail all of the recipients of the loans, but we certainly want to make sure that we're not necessarily sharing any information that could be private or sensitive to our local business owners and businesses. So we will happily share information with board members without hesitation or any delays. But we do want to have a chance to go over that entire program with you, let you know what the process was like, how it went, and then sort of what it looks like now, and then maintain that program. And then in potentially, depending on how it is refilled, the OCFC does have the bandwidth to have a loan program, and the prior board had always talked about having a micro loan fund. So that discussion could also erupt out of the COVID loan resiliency program. So that all being said, we would need a motion in a second to approve the payments for the OCFC.
So moved.
I'll second.
I'll do a roll call. Dan Bloomer,
Yes.
Paul Riskevich,
Yes.
John Dessett is absent. Mike Torelli,
No.
Vincent Odock,
Yes.
Tyler Edsel,
Yes.
Leslie Pieri.
Yes.
All right, motion passes. The next item on the agenda is other board business, if I'm not mistaken. So does anyone have any questions or comments? Or other business for that matter? Okay, then the final item is adjournment. I would just need a motion to adjourn.
So moved.
Second,
Second.
Second.
all in favor?
Aye.
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 We're adjourned. All right.